Okay, guys, all this effects here, we're gonna be analyzing in Nasdaq, guys, in Nasdaq, Nas 100. So Nas 100, you're gonna be studying it from a daily time frame. Daily time frame. I've analyzed the Nasdaq several times, like almost every day when people do ask me to analyze it. So it's like I know it by head now. So I'm just doing it for those guys that we've never seen me analyzing it. But otherwise, from a weekly time frame, guys, this is the structure that we have: impulsive correction, and then this being an impulsive phase. Okay, so this was impulsive correction phase, impulsive phase. So currently, as we speak, the market, we can say that the market, it is in a impulsive phase, correction impulsive phase. Usually the best simplest way to do is to clone whatever that it was, to say the market is going to move the very same distance. I usually do that most of the time because most of the time it plays out exactly to be the same. Yeah, well, so now we have this lowest point after the market did gave us a what, a correction. So what do we have? We have this whole move right here as the impulsive phase of the market. We have that whole phase as the impulsive phase of the market. So what I usually do is that I'm going to, and okay, in this case right now, I already can see that this is an impulsive structure. I mean, this is an uptrend structure. From this point where going all the way up, I can already see that it's an impulsive, I mean, an uptrend structure. So in an uptrend structure, I'm just going to be looking for what, for buying opportunities. But now I need to also to understand that if I'm in an impulsive, if I'm in an uptrend structure, where am I currently at? Am I in the phase impulsive phase, or am I in a correction phase of that particular structure? Because I need to see myself in a what, in an impulsive phase of an uptrend, so that I can just keep on looking continuation patterns to carry on with my structure. Okay, so in this case right now, let's figure that out, if are we in an impulsive or are we in a correction. So this was going to be impulsive correction, impulsive correction, impulsive correction, impulsive correction, impulsive correction. Currently, the market is in an impulsive phase. So, if the market is currently in an impulsive phase, what am I looking for? I'm looking for continuation patterns. That's all that I'm looking for. If I'm going to be able to get that, therefore, it's simple and straightforward. I'm just going to be entering with the buys, 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 without waste of any energy to reanalyze a lot of things in a lower time frame. Lower time frame, I'm just going to be looking for what, continuation patterns. Okay, so there's no need for me to be looking for everything that is here when I go to a lower time frame. I can simply start here at this point right here, that okay, this was my last impulsive. Maybe in this case I can just say, okay, this was my impulsive, this was my correction, so this being my correction phase, therefore, which means I can just delete this because I don't think I really need it. I hope you guys can see that I don't really need it. So this was impulsive correction. Now the market is currently in an impulsive phase. So since we are in an impulsive phase, what are we going to be looking for in a correction, in a lower time frame? We are going to be looking for what, for continuation patterns. The last time I was live, I've all people, they ask me what strategy do I use, and then I just figured out that I use the flex. I trade bullish flex and bearish flex. So if the market structure, it is in an uptrend, therefore, which means I will be trading bullish flex. If my structure is in a downtrend, I will be trading bearish flex. Very simple as it is. If this is your uptrend structure, therefore, which means this gonna be, okay, let's do it this way. If this is going to be your structure, you can already see that okay, this is an impulsive structure, né? Okay, you wait maybe for the correction. The moment the market jumps into the impulsive, going in the direction of the market, that's when you start looking for those continuation flex. That is how I trade. It gives you that impulse again. I look for those continuation flex. That's the only thing that This is how I trade. I trade simple and straightforward. I don't contradict myself. If it's a downtrend, I can already see that, oh, this is a downtrend. When the market finishes with this retest, this correction, I look for what? Impulsive. I look for those continuation patterns. That is the only thing I do. Continuation pattern. So you can see that my trading is just simple and straightforward. I trade bearish flags and and bullish flags, simple as it is. So which means now when I'm going to a lower time frame of this Nasdaq, I am going to be looking forward for those bullish flags and those bearish flags. But now because we're in an uptrend, I'm going to be looking for what? Simple bullish flags. Easy as it is. Simple as it is, guys. So this was the correction as you saw last time. This was the previous correction. So after this correction, the market did what? The market gave me this strong bullish move to the upside. And then as you can see now, what is currently happening? The market is currently giving me the what? The flag that I'm looking for. So definitely Nasdaq is gonna give me a what? A buy. Last week I gave some sort of like a signal. If you can go to my YouTube, you would see there was a trade. I think there was a trade that we lost on a Nasdaq. Nasdaq gave us this bullish one, and then the market. I think the market was still somewhere here. I think the market was still somewhere here. Yeah, I think this part of the graph was not yet formed. I think this part of the graph was not yet formed. So I was like, okay, this was the impulsive phase. Okay, so this is a what? This is a correction phase. The mistake that I did, or what the chart did, actually, you need to understand. Yeah, actually, this is the best explanation for you guys to understand whatever that I'm about to say. That I also make mistakes sometimes because I'm looking at the beautiful setup and then I tend to attach my feelings to it that this is going to play out, even though sometimes I haven't confirmed some of the stuff, of which that's when I get trapped. So how did I lose this trade? I lost this trade because of this. Um, let's take this part of the graph was not yet here, because this is where I entered. I said, okay, the market gave me this bullish move, and then I said, okay, this is a continuation pattern. I am gonna take when the market breaks above that trend line. But sometimes it is not advisable when the market broke this trend line without confirming certain thing. Like it sometimes it's really tricky, guys. Sometimes it's really tricky, because if you can look at this, you would see yes, this was a beautiful continuation pattern, and the market broke above this point right here. So I entered this. With my stop loss somewhere here below this candle there, and then I said, okay, this market is gonna move until all the way to the upside like that. You see, so this was the trade, and then the market decided to do what? Decided to come all the way to hit my stop loss. So what I've noticed is that I ignored this. I ignored this part of the graph. I ignored this because there's huge difference between. I'm gonna draw these two things for you so that you can maybe get my explanation of what I'm trying to say right here. Let's say you've got a zone. Let's say you trade support and resistance zones, because these things, they are all the same. It's just that we are looking at the market differently. Trend line, support and resistance, whichever strategy works, just that you have to follow the market structure as well. Okay, so if let's say this was the um, a zone before market hit here, and then it went down, and then it came back right to this point. Now the market is going to retest your previous high, and then it's a certain zone that you want the market to, you're relying to, you need to say to you're gonna take your buying opportunities. There's two things that can possibly happen right here. The market can charge your zone impulsively like this. These two things, they are not the same. There's one that is quite high likely to play out. There's other one that which is has got chances of not playing out. Yeah. So if you have something that looks like this, so this one, these two right here. Let's say you have two things that looks like this, and then you'll be like, okay, when the market breaks above this my trend line right here, I am going to be taking a what? I am going to be taking a buy. Just like myself, that's how I traded that. When the market breaks above my correction at the correction phase, my correction trend line, that's when I'm going to enter. So if this market it decides to give me a strong candle closing above this trend line right here, and then the market gives me a strong trend line closing above this candle right here, there is one between these two scenarios. This is highly likely to play out because there's an extra confirmation on this one, and then this one has got chances of being, uh, should I say, of going back and take you out from your stop loss before it goes up. Let me explain that to you. I'm saying there is a highly possibility that if this one breaks above, it's gonna go all the way up because it hasn't got an extra confirmation than this one. This one has got more like a what? If you can have a look here, if the market comes break above this point, this was a double top and then the neckline breakout. Therefore, which means this has had chances to go up. Whereas this one, it can still come break above this point, but it has not yet confirmed that this downtrend structure, it's done going down, it's finished going down, or it has any confirmation to say now we are changing direction, because the market can still come to this break above, close here, and then you think, okay, now this is the best opportunity to buy, only to find out that it's going to be giving this double bottom, and then it's still going to give what? The lower low. You can still, this is a lower low, lower high, lower low, lower high, this is still a lower low. And then you see here the market has not yet broken above this point right here, therefore it can still come down, take you out, and then after that it does what? After that it goes your direction, because the structure wise, yes, the zone is good, you want to take a trade from that zone, but structural wise, the structure that is going to your zone, it is not yet confirming that you can enter the trade, whereas this one, it is confirming to say if the market breaks and close above this zone right here, yes, it's going to be a good be what? A confirmed trade to say now we are going up. So what I did now on Nasdaq, it was exactly this. If you have a good eye to see, this was a what? This was a lower low, lower high, lower low. And then what did I do? I entered here exactly when this candle closes. Did the market close above this previous high? No, it did not close above this previous high. Therefore, the market can still come do what? Can still come down and take you out, and then before it goes your direction. So that was the thing that I really ignored when it comes to this trade. So of which it was wrong. That was something that, because I attached my feelings to this thing to be like, you know what, this thing is gonna actually play out. I can see it, I can feel it. So I attached my feelings to this trade, and then it was wrong. So the right thing to do right now, it's looking at this thing, you can see Uguti and Zani, it is kinda lower low, lower high, lower low, lower high, lower low. So the market still has not yet broken above the C. The market still failed to break below this, to break below this point right here. So if now the market can decide to come break above my trend line right there, therefore, which means this is can be a trade that can play out. I'm not saying it's going to be 100% that's going to play out, because there's no strategy that is 100%, guys. I'm not going to lie to you. I do lose trade as well, you see. So this was going to be an impulsive, and then the market is in this correction phase. You see now, even now the market is still kind of trying to be going down. So if it fails to break below the previous low, that is an extra confirmation. If the market comes hit here and then breaks above right here, therefore this is a trade that is highly to play out. Do you get what I'm saying? I hope you guys do understand what I'm trying to say to you. This has got highly chances to play out. So Nasdaq is definitely going to be taking a buying opportunities, or it's in a shape of being in an of going up, of buying. Okay, so it's in a bullish structure. So this is the trade that on Nasdaq, this is how I am going to be taking it. I'm going to be taking buying opportunities on Nas 100. Okay, Nas 100, I will be taking buying opportunities. So these are the things that you need to be careful of, guys. I don't want to lie to you. I do make mistakes sometimes by attaching emotions to some of the trades. So The only way to learn in forex is to lose your money. Unfortunately, it's like that. The, that is the only way to learn in forex. Lose your money, then you will feel the pain to say, you know what, not gonna do it again. Okay, so this was Nasdaq, guys. I'm looking at this, so I'm going to save